morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, November 15th. Well, quiet, mostly higher trade here overnight as prices rebound from yesterday's sell-off. Corn right now is steady to about a penny better. Bean complex, 8 to 10 better in the beans, led by strength in the bean oil, which is up over a penny and a half now. Bean meal has pulled back here a touch, looking about $1 to $2 lower, and wheat prices are also higher right now, trading 2 to 4 better. Speculative traders, they were pretty active sellers across the ag space yesterday, selling about 12,000 contracts in both corn and in soybeans, while dumping 4,000 to 5,000 contracts in the products and in wheat. Open interest spiked over 11,000 contracts and in soybeans, suggesting fresh shorts coming into the market, while in bean oil, open interest did drop another 7,000 contracts, suggesting speculative traders shedding some recently established long positions here, and that now for the third consecutive day. A lot of usage data out today, with exports at 7:30 Central Standard Time, while NOPA Crush comes out at 11 o'clock. NOPA members are expected to have processed a record amount of soybeans in the month of October, possibly a record for any month, really depending on which pre-report survey you're looking at. Yesterday, the EIA reported a record amount of ethanol was produced last week, with 327 million gallons produced. Corn usage continues to run well above the pace needed to reach the USDA usage forecast of 5.45 billion bushels. So I would look for at least a 25 to 50 million bushel increase in corn usage in the next WASI report in December. Late yesterday, the Buenos Aires Grain Exchange, they held their wheat production forecast unchanged at 18.6 million metric tons, while harvest advanced 5% to 17% complete. They also kept their corn and soybean acreage estimates unchanged, reporting corn plantings advanced at only 2% to 39% complete. Bean plantings did advance 12% to 20% done, under what they would term optimal surface moisture on their fields. Look for another good week of progress this week before some widespread rains reemerge next week. I think the favorable South American weather forecast played a big role in yesterday's sell-off back below $10 in January beans, and also just renewed tensions, or expected trade tensions between U.S. and China. Favorable weather in Brazil led Safras and Mercado to raise their Brazilian corn production forecast 1 million metric tons yesterday, 235 million metric tons. That's well above CONAB's revised estimate, that's still just under 120, and also well above the USDA's forecast at 127 million metric tons. In the U.S., recent rains across the nation's midsection, the first half of November, just continue to cut into drought readings for key growing areas. Corn acres in drought last week fell 7%. Bean acres were down 6%, while winter wheat plunged 14%. I look for readings to continue to drop as we do see another rain system impacting the southern plains this weekend into early next week, which should also continue to drive wheat ratings higher as we move towards dormancy. So far, Deeks corn has held above yesterday's low at 418.5 or 418.25. Below that, we do have some moving average support in the 411 and 416 areas. Levels I think will hold. Inside trade for beans overnight, however, Jan did stop just short of that $10 level. D's oil made a new low for the month by one tick yesterday before rebounding into the close. I look for prices to be very sensitive to today's NOPA crush data. The stocks here looking for a little bit of a rebound in oil stocks for the first time in 7 months. Inside trade for D's meal overnight, and wheat just continues to trudge along here just above their 3-month lows, which are just above their contract lows. So thanks for listening, everyone. I hope you have a great weekend.